In this video, I'm going to talk a little bit about how people pay for long-term care. So some people kind of have the idea that Medicare is going to cover this, or perhaps some other program, and it may come as a bit of a surprise that Medicare in particular is going to be somewhat more limited. So typically, Medicare is going to cover um, relatively short stays in a care kind of facility, um, and if specific criteria are met. So short stays or maybe possibly home health, um, if very specific criteria are met. And generally speaking, the time period associated with that coverage is going to be limited, and the actual coverage amount is going to be limited. So in general, assume not much from Medicare, basically. Um, Maybe short stays under or home health under certain circumstances with specific criteria, but for only a limited time period and with limited coverage amounts. So it's just not necessarily going to be covering all that much. Medicaid may cover some things, but generally this is only going to be something that is going to apply um, if the people involved have low income and low resources. So not a lot of assets and not much income. So there's a good chance that a fair portion of the population would not qualify then because of either too high of an income or too many assets. So there's a fair chance that Medicaid wouldn't necessarily apply. And I'll talk about Medicaid and long-term care and more in a subsequent video. But then we get into personal resources. So if we're looking at personal resources, then in order for that to be a source, the person has to have saved previously. So that requires prior savings. So if the person hasn't made a lot of prior savings, well, then you don't have a lot of personal resources. And I guess at that point, you're hoping that you qualify for Medicaid or something else. But also, it's worth noting that even with personal resources, even if you've accumulated a fair amount of personal resources, um, it, using those resources could create a hardship scenario for, say, a surviving spouse. Um, so let's say you wind up in long-term care and your spouse winds up with significantly depleted retirement savings, basically because of the fact that a lot of it is going towards your long-term care. So that is a potentially viable option, but it's worth noting the effect that it could have upon loved ones. And then that brings us to the idea of long-term care insurance, which would basically help to cover some of these gaps. And that's where this could be particularly beneficial. That basically Medicare is not going to cover a whole lot. Um, Medicaid, you only qualify to a certain extent if you meet certain criteria and so forth. And then if you don't want to deplete all your personal resources, pretty much you're stuck with long-term care insurance being an alternative, but that means you have to have purchased it. So those are the main ways that individuals will pay for long-term care. Hopefully this video has been helpful. Thank you for watching and have a great day.